Good afternoon and welcome to Countdown right here on BloombergQuint Live. I'm Neeraj Shah. Yes, I'm missing my specs, but that's okay. I can still make do with the next 1 hour of this show. Maybe it will help because the world markets aren't looking all that positive in the session today. You look at, before we get to our markets, keep in mind that Europe has started off in the red. The indices are down about 1.5%, and the US futures are pointing towards a start which could be marginally in the red. So the world cues are not that positive, and we have our own issues out here in banks and NBFCs. BFSI is dragging our markets lower in the session. So I look at the Nifty and the Sensex, about 1.33%, 1.3% apiece. The Nifty Bank 3.29%. As I was saying, it is the financials which are leading the markets lower. Bajaj Finance, top of the pile, almost top of the pile. There is Infratel at top of the pile, and we'll talk about Infratel a bit later on in the show, not immediately at the start. But 9.5% lower for Infratel. But Bajaj Finance is the big newsmaker. It is sub 2,000 now. The QIP happened at 4,100. The stock has halved from the price at which the QIP happened, wherein they raised about 8,000 crore rupees. This was what, 3 months back. There is weakness in FinServ as a result of that, 6.5. Look at the banks, the banking losers. So IndusInd Bank, Axis Bank, ICICI Bank, HDFC, all of them have looked wobbly. And Z Entertainment, I think, has fallen today 8.5. I don't know if it's a ghost of the past coming back, or maybe the last 2-day rally. Even post this kind of a fall, Z is still up 7% for the last 7 days. So that tells you how much the stock has run in the last few. But the man of the match has to be Reliance Industries, up another 5% in the session today, 1442. It made a dip of 88.70 or thereabouts in the month gone by. From there, Reliance has had a one-way rally. 1 month return 52%, 7-day return 25%, and we're talking about the largest market cap in the country doing this. So extremely strong show. Some strength in Britannia and select pharma names, the likes of Sun Pharma and Cipla, seem to be doing okay for themselves. At the broader end of the spectrum, just want to mark a few names on the BSE 500 index, which would be active movers for throughout the trading day today. Sonata Software has looked strong, up about 10%. It's strength in Strides, Alembic, Alchem, Ajanta Pharma, Lupin, Laurus Labs, Ipca Labs, Jubilant Life. You name a pharma stock, it's in the green. Frankly, viewers, all of you should consult your financial advisors and try and see if there is a pharma fund that is still worth investing in, if there is one, because this is one index that is doing well, and it's very difficult to figure out which company will do what at what point of time. But nevertheless, these stocks are doing rather well for themselves. Aside of pharma, there is some strength, as I said, in Sonata Software and Deepak Fertilizers. What is not doing well? Oberoi Realty, 311 rupees. It's been decimated. And then the NBFCs come in. Chola Financial, M&M Financial, Ujjivan Financial, LIC Housing Finance. ICICI Prudential is down about 7.5, and we'll talk about that too. So those are a few names that have looked slightly wobbly in the session today. I'm sticking to the more liquid names right now. Let's get in Kunal Rambia to kickstart the proceedings on the show. Kunal, good having you. Thanks for joining in. It's been choppy, the index, to say the least today. Reliance helping it, but financials not quite. What's the trade, Kunal? One is your view, but is there a trade that you're initiating on the Nifty or the Nifty Bank?
Hi Neeraj, very good afternoon. So, if you look at the overall structure, last week we were discussing on Nifty and Bank Nifty. So it was a very clear rising wedge formation. So the chart is right now in front of us on screen itself. So, the chart which I shared, you can clearly see that the way Nifty was moving in that rising wedge, every uptick exactly is halting at the same resistance mark, and the support is taken on the uptrend line. Same is the case with the Bank Nifty. If you look at the formation right in that consolidation phase itself, which we in technical call it as rising wedge. Now I'm looking out for two levels. The first is on the Nifty, which is 8,950, and on the Bank Nifty, the last bull case scenario can be say till 19,000 mark. By any chance Nifty goes below 8950 and Bank Nifty goes below 19,000, I think we'll see a significant downtrend again resuming soon. Yeah, what you're saying is very true. The darling of the market has been Reliance in couple of days, but I think it's fading away due to some kind of profit booking as of now. And if at all the new rally emerges on the downside, I think one needs to be very cautious, and we may see a vicious selling coming in soon.
Okay, so are you then therefore initiating either short trades on the Nifty or the Nifty Bank, or buying some put options?
So Neeraj, again, this the typical behavior of the rising wedge is that timing that breakdown is very difficult. So these are the two levels which I'm looking out for. Once those two levels on the Nifty and Bank Nifty, the way we discussed, are triggered down, I would suggest to directly short the futures if someone is willing to do with some kind of hedging protection, say 9,100 call buying at that point of time, and on the Nifty, Bank Nifty, it can be say 9,500 call buying along with future shorts. So that can be a decisive short. I think a couple of more gap downs then probably can help us to trail our stop loss and carry forward the same position. So these are the index views, which I'm looking out for.
Okay, what about specific stocks then, Kunal?
Right. So, I already shared one of the charts, and that's of Maruti. If you look at the entire formation of Maruti, it was clearly, after taking the bounce from 4,000, 3,800 mark to 4,000 mark, it came up to 5,500. Now it's making a perfect head and shoulder formation, what we call it as the first small curve, the second larger curve, and the third small degree curve, which is already underway. And you can clearly see that on every rise, there is a significant selling pressure on the counter. So I'm waiting for 49.50. I'm actually already short on it. Advisable to initiate position right away. So one can think of selling 5,300 to 5,500 calls on Maruti. Wait for the trigger below 49.50. I think below 49.50, the counter is heading for again 4,000 or even lower levels this time. And only one counter which I feel is giving me some comfort on the buying zone, and that's TCS. So again, coming to the chart which I shared, there is a clear ascending triangle formation. So I think TCS till 1775 can be a decisive, buy on decline kind of stock. I'm very bullish on the counter. The formations are very strong. Trigger remains pending, but think of buying on every decline till 1775. I'm expecting the counter to reach somewhere in the zone of 2150 to 2200. That's only IT company which I'm comfortable with. And other, we have the large names like Bajaj Finance or Bajaj Finserv, which are definitely more giving comfort on the short side.
Oh, sorry, one last follow-up. Are you saying you'll go short on a Bajaj Finance after the 9% drop today?
Actually, Neeraj, morning itself we were short on Bajaj Finance. So yeah, as of now, the risk-reward ratio is not favorable. But what we have seen in market is that the time the new rally emerges, that just continues in the same fashion. The same happened with Bajaj Finance last year. Every high was taking it to a new high. The same is the case right now. If someone has a guts, I would say definitely the risk reward ratio is definitely not favorable. But otherwise, keeping the stop of 2230 to 2250, I still remain short on the counter. I expect 1500 to 1400 levels to come soon on speed.
Well, that would be some doing for this one. Let's wait and watch if that happens. Mahesh Joshi of William O'Neill joins us right now on the show. Mahesh, good having you. Thanks for joining in. Can I start off with that, Mahesh? I mean, NBFCs by and large seem to be weak, but the market is selling off a consumer finance leader like the business model has completely come to an end. I mean, what's happening here? Is this realization that we don't know when this will come back and therefore get it out of your portfolio, or is there something else?
The two aspects. First of all, afternoon, Neeraj. I think what had happened in terms of the outstanding growth that all of these pedigree companies had posted, including Bajaj Finance, and absolutely nothing wrong with the business model. But I think the outstanding numbers that they were posting quarter after quarter, I think the markets are in a way skeptical in terms of whether these numbers will get repeated. Obviously, I think the washout in terms of the provisional numbers that they've put out, I think on a quarter-on-quarter basis looks very, very soft. But Q1 is expected to be a huge washout in terms of all the parameters that we're looking at, advances, growth, what happens in terms of the exposure towards the unsecured part of the business, including SMEs, MSMEs, and what kind of an additional provisioning might be required on that count. And the second element is when the markets were good, right, and when the trajectory was in the right place, the valuations at which all these counters were trading at 4-5 times book, I think the market was still willing to give that sort of a premium. But in doubtful conditions like this, and when you probably don't know, and when you're pinning hopes for a second half revival, whether that demand curve come back very, very strongly post Q1 in Q2 or in the second half itself, I think time will be the best judge, and the numbers will probably do the judging from a price perspective. So I think nothing wrong with the business model. I think an absolute solid and a robust business model. However, I think all these conditions that are probably laying forth for the stock are probably leading to the huge underperformance that the stock is probably going through at this point of time. So I think NBFCs are in a tough space at this point of time. Therefore, I think I've always maintained wait out for results. I think there is no need to rush into these companies.
Yeah, okay. So wait out for the results, maybe the ensuing commentary and all of that. And I just want to draw viewers' attention, people who particularly like Bajaj Finance as an investment idea. Keep in mind, in the con call, the management had stated that at given different scenarios, right, that if the lockdown ends on 14th April, then there would be recovery could come in by X. If it ends on 30th, then it's X, and then it's 15th May, then it's X. As of now, it's definitely not ending by the end of April. At least 3 days of May, maybe more, and therefore people should be wary about this one. 8.5%, 1984 and counting. The other bit is, Mayuresh, the kind of damage that we're seeing in almost all the banking names, the large cap ones. What's your sense here about whether these give you the opportunity to buy into any of the high quality ones, or would you stay on the sidelines for these as well?
No, I would, right, Neeraj, because similarly to what is happening with the top-notch or the top-tier NBFCs, for the top-notch private sector banks, I think the scenario is no different. So when you're talking about advances growth actually coming off, I think that's very well assumed for Q1 of this financial year, which means that the annualized earnings take a hit. Again, I think the entire revival in terms of loan growth picking up quite significantly, and what kind of a hit do they probably take, specifically from the mid-corporate segment? I think that is going to be very, very substantial in terms of the quality of earnings that they will report. The second element obviously is a few instances of what we've probably seen in terms of exposures for a few clients outside India. So what happens on that front? Because if global trade comes back very, very softly, I think you're expected to see the overseas operations for a few of these banks and the lending part of it also coming under some kind of a pressure. Third, again, I think in terms of the provisioning aspect, if provisioning is needed to get accelerated in terms of all the unsecured lending that they probably got, even though the moratorium probably has got extended from the RBI perspective, I think the quality of earnings is something that the street is extremely skeptical about at this point of time. So I've always maintained that till this pandemic and the curve starts flattening out and comes off, I think the next few months, I think it's will be a consensus trade, pharma, stroke, FMCG, stroke, specific specialty chemicals. I think the high beta players, including your quality banks, NBFCs, will come into focus post Q1, or rather at the end of Q2 itself. So I think the second half is where I think the entire focus will be in terms of all these beta correlated sectors moving very, very strongly. And we've actually seen that in the past period. So I think if you probably look at what had happened in previous crisis periods as well, I think these stocks get beaten down the most. They do try to find their feet over the next couple of quarters. And once the market gets a sense that the worst probably might be over in terms of numbers, and again, I think the future outlook probably looks a little bit better from an economic standpoint and the business standpoint. I think they make a huge, huge rebound. My own sense is that wait it out. I think there are quality stocks within all these pockets that you're talking about. I think there will be better times to come over the next few weeks and months. And the returns that they can give from the second half can be stupendous for the next year and a half.
Okay. Mayuresh, the other one is Reliance Industries now. Is the rally too much, even for a stock which has got such a large behemoth, global behemoth as a partner, or would you believe that there could be more in store? Fundamentally, but can Reliance add more weight to itself?
So again, Neeraj, I think the developments that have obviously happened are the steps in the right direction. I think Jio, obviously the kind of enterprise valuation that it gets, the kind of reported EBITDA that it can post, and the deleveraging that happens on the balance sheet is clearly something to be seen and observed. The second element obviously also is in terms of the overall structuring within the MSI basket itself. So if you probably look at Reliance positioning within the MSI basket, a lot of the passive investors will also probably need to pump in. So I think the move that you're probably seeing is both in terms of the expected synergies that will come through, specifically from the Jio deal, as well as the passive buying that is expected to readjust to the overall MSCI balances. The third, obviously, is the kind of scope that they've got specifically on the retail side of the business. So I think Jio Mart and the kind of strides that they can do over the next few quarters in terms of local kirana walas and getting the entire small business ecosystem in place, I think there is a huge potential on that one. So I think it gets offset in terms of the core business actually coming under softness because of the fall in crude prices. Though Reliance has multiple feedstock options, and the reported DRMs will be better because of their middle distillate portion and the new regulations that have come through from Jan 1st. I think the offsetting effect will take place. But I think Jio and retail should probably hold up the earnings element at least. And again, as I said, the passive buying, which probably mandated the kind of move that we've seen. So anybody holding on to Reliance should clearly hold up.
Viewers, keep in mind, the one thing that you have to remember is that Reliance, with the weightage now that it has on the Sensex, uh, it will lead to a lot of global fund managers to do passive allocations, if at all they want to do to India, and some of the active fund managers will not be able to stay underweight by virtue of the deal that Geo has announced on the SOTP valuation basis as well. Geo is valued more than what the earlier reports were suggesting, some of them at least, if not all. So, I mean, there are some factors like these also at play when it comes to Reliance Industries. So you got to be watchful of that as well. Okay, now the other thing is the fall that we're seeing today in ICICI Prudential, and that stock has gone off quite rapidly in trade. Morgan Stanley came out with a note on ICICI Pru today. They said that their belief was that the share price will fall relative to the industry over the next 15 days. The March 2020 premiums declined nearly 50%. I think it was 49%, but approximately 50% on YY basis. Morgan Stanley rightly believes, of course, that the premium will weigh in on the VNB growth in FY20, and they expect the persistency trends of this one to also be under pressure, and which is why their belief is that ICICI Pru, their belief in the morning was that ICICI Pru would decline relative to the industry over the course of the next 15 days. It's declined about 8% already. Can it do more is the question. Both technical and fundamental view. First, a quick technical view, Kunal, on ICICI Pru.
So now, Neeraj, if you look at the entire formation again, right from the top of around 545, it came down to 230. And from there was a bounce, and this bounce is exactly forming rising wedge again. Today is a decisive breakdown and a gap down open and further follow through. And that's giving me a breakdown signal. So if someone wants to go short at this point of time, yes, keep the stop loss of around 375 and expect the target of around 275 from present level. And again, reason being it's a gap down open, I expect this kind to be an island cluster kind of formation. So that will lead to this gap filling in longer while. So definitely it's a short. If someone wants to go for a swing trade, then wait for the breakdown below 320. Otherwise, it's a clear short at this point of time.
Manish, what about you? How do you view ICICI Pru? And if aside of ICICI Pru, what about the other peers?
No, so for the space as a whole, right, Neeraj, I think the kind of changes that they're doing in terms of the product mix itself for the last few quarters, I think that had started giving them a reasonable amount of momentum from a yield perspective. The second element, as you rightly put forth, Neeraj, is the persistency. I think that needs to get monitored very, very clearly. What happens with the VNB part of the business element? Because I think the value of new business is extremely critical for insurance players. And they've pretty much gone up the value curve because of the VNB margins actually sustaining at higher levels. The third element specifically, I think you need to break down individually the products that each of these companies are doing at this point of time. I think a high skew element for ICICI Pru also is through the ULIPs that they still have in terms of their portfolio mix. And what happens in terms of the overall business perspective from a premium perspective because of the new tax changes that have happened for tax slabs to be chosen for people below 10 lakhs, which probably can also involve a few people opting out of insurance policies as a whole. So yeah, I think there is some element of a business hit that can take place. Yes, from a sectoral perspective over the next 5 to 10 years, I think this is one sector because of the sheer under-penetration can do really, really well. But again, I think insurance companies need to come out with smart packaging as well, in my opinion. I think it's not just about tax saving. I think it's about saving lives is what the message should come. And I pretty hope so. I think all these products will come through a longer period of time. But at this point in time, I think we'll wait and watch for this part as well.
Okay. Well, so that's the view for the life insurance space. Keep these stocks firmly at the back of your mind. They've had a slightly terrible outing today. The question is, can they bounce back? What is doing well, though, is Britannia. What is doing well is Cipla. What is doing well is Sun Pharma. Sun Pharma is now at 489, 2.5% higher. Mayuresh, one final question really. Is there a pharma name that you would add to your portfolio currently?
So we are overweight, Neeraj, very frankly, on the pharma index as a whole. So I think most of the names are doing exceedingly well in markets like this. As I've maintained, I think the next couple of months, I think pharma will still be the sector because the earnings will still hold up pretty strongly. both from a Q4 and a Q1 perspective as well. We had discussed Alchem in the week gone by. My own sense is that within the large cap names, if somebody is still trying to hunt, and I'm not saying hunting value, I think from an earnings perspective, I think Cipla still looks very, very attractive from a large cap perspective. Yes, the stock has moved up significantly, but with the approvals that it has got specifically for its Proventil launch, the earnings actually go up 5-6%. And they're also targeting the institutionalist segment. So a couple of products, Tramadol, for example, I think can do exceedingly well over the next few quarters. And the margins should also hold up. Now, the only risk factor for pharma companies is obviously the FDA resolution for their plants. What happens to the Goa plant and the pricing issues for the drugs already in place from a generic perspective. I think that can just assume earnings to be flattish. But I think all these new approvals coming through and with new margin levers getting in place, I think pharma is a sector to look for. So yeah, I think Cipla to a certain extent, even Biocon, AstraZeneca, I think can be a good short-term momentum pick as well.
Okay, Mahesh, we'll leave it at that. Thanks so much for joining in today and giving us your thoughts. Appreciate your time.
Thank you so much. Thank you so much.
All right. The lockdown seems to have thrown a spanner in the works for DHFL resolution process. Vishwanath Nair joins us now with more details on this. Vishi, what are you learning?
Right, Neeraj. So as we understand from our sources, the entire process for DHFL, the resolution process for DHFL under IBC has been pushed back. There has been more time given to the bidders to firm up their bid and submit the final offer. Now, if you remember, the last deadline was 7th of May, so unlikely that they will be able to submit their bids by the 7th because the national lockdown is at least extended till the 3rd of May. So right now the lenders have decided to push it till the 27th. This is also in conjunction with the norms that have been put up by the IBPI, which essentially said that the lockdown period should be removed from the entire resolution process because it's nobody's fault that things are at a standstill. But apart from this technical issue, there is also a problem being caused by the lack of interest among some of the bidders who have participated in the entire process. Remember that 24 different entities had submitted their expression of interest for DHFL back in January. However, some of the more local, non-bank financial companies such as Edelweiss, Adani, there's Hero FinCorp, or Piramal Group, all of these entities seem to be sort of rethinking their strategy as far as buying DHFL is concerned. What people are telling us, what the sources are telling us as of now, is that the current status of the NBFC industry and the non-banking, the financial services industries in general, has caused them to review their entire process. Remember that the NBFCs are not being given that 3-month moratorium on their repayments to banks. However, their borrowers are allowed to delay their repayments by 3 months as per the Reserve Bank of India guidelines. So there is that asset liability mismatch which is being caused on the NBFC books, which will again cause asset quality issues for banks who have exposures to these NBFCs. Apart from this, the Reserve Bank of India's special line of funding, of liquidity that was announced under the DLTRO 2.0, that has also not seen much interest from the banking industry. So all in all of these issues are combined together and coming in the way of these NBFCs making a decision as far as buying DHFL is concerned.
Okay. It's Vishi, thanks so much for that. It's interesting as to how a lockdown and virus can impact one beleaguered space and components of that space in so many different ways. That's the really interesting part. By the way, let's wait and watch. We'll get to know if indeed there is some kind of a package coming through. We've been hearing this now for weeks or other days, a few days, and still we haven't gotten that. There's some news reports about how this might not even happen this weekend too. So lots of queries. Let's wait and watch what happens there. I think I'm told Pritesh Mehta is with us. So let's quickly get in his top calls before we hear out what Rahul Singh of Ampersand has to say as well. But Pritesh, good having you. Thanks for joining. What's your trade right now, Pritesh? We're 3.5% down for the Nifty Bank already.
Good afternoon. Now see, it was good to see 2 days of consecutive uptick on the index. But I think that, we are still stuck in a trading band of 8800 and 9400. So I think we should not be getting carried away. The one thing which I'm excited about and quite pleased to see, in fact, the breadth of the index has been gradually increasing. So when I say the breadth, it means the number of Nifty stocks which are trading about 200 moving average, they are increasing. So that number was around 0% back on 23rd March. A month later, it is 18%. So I can see this increase in breadth, and I would term it as very bullish sign, because market in the last 2 weeks has been range bound. And we have, within this range bound trade, we have seen multiple whipsaw. Today we have seen a cut of more than 100 points, but again, market has been providing this kind of movement from last couple of weeks now. But the breadth is improving. So I think we should wait for 9400 to take out before creating fresh longs. In terms of ideas, we have two sell ideas. The first one is short HUL. Now I feel the run up which we had in last 1 month in FMCG stocks, FMCG index has reached its peak. And if I look at ratio of FMCG Nifty, I can see a high pull pattern taking place, which tells me that this index is bound to correct. And HUL being the leader within the FMCG basket, I think it could lead from the front on the downside. So I'm expecting a fall in FMCG from here on, and we can see correction in HUL, especially till the level of 2150. Then we target a second short is MGL futures. Now see, this stock had a strong run up, but again I can see double bottom sell taking place. I can see a bearish anchor column, which tells me that the stock is due for for a reversion or downside. So sell for a target of 840.
Okay, so that's some calls and a view on the index as well. Mind you, by the way, just before we hear out one more voice, Britannia has now overtaken RIL, or rather RIL has slipped below Britannia in the pecking order in the list of gainers. So Britannia is the top gainer right now. Reliance is down, not down, but just up about 3.69%. It went up almost as high as 7% or 7.5% at a point of time. So it's been quite a dramatic pullback for Reliance from those highs of the day, and which is what is weighing in on the index as well, I reckon, because now it's not just the Nifty buying, the Sensex and the Nifty are down 1.5%. But as I said, let's get your market voice. Rahul Singh of Tata Mutual Fund, just wanted to read out his name. He says lesser discretionary spending in the current scenario might have an impact on a bunch of sectors in the current COVID-19 times as well. And he's sitting on cash, and he advises investors or viewers to sit on a bit of cash in the current times and wait for a correction, possible correction to come in.
We need to see how it pans out. And also some of the discretionary spending which will take immediate hit is related to travel and tourism and, just the sheer more activities or the consumption which is more outward going in terms of either eating out, restaurants, multiplexes, etc. So that's a very clear, I think, a very, very clear impact one can see. Now, whether this will impact consumption or demand for white goods or cars and two-wheelers, I think that we need to watch. That is probably stretching it a bit too much at this stage. We don't have enough evidence, or we don't have enough data to suggest that that is going to happen. Yes, to the extent that the slowdown persists and there are job losses and if there are salary cuts and so on, and if that trend kind of picks up over the next 3 to 6 months, then you're right. But right now, I would not worry on those kind of discretionary consumption, because mind you that that is nothing to do with behavior change. That is a underpenetrated market. For example, in air conditioners, that's a hugely underpenetrated market. Now, from a 3-year, 5-year perspective, whether this will reduce the demand for air conditioners is probably getting a little bit ahead of ourselves.
Everything that is, at least to my mind, and maybe I'm mistaken, but things, whether large, mid, small, which are potentially showing some signs of strength or resilience in business are priced adequately to my mind. I mean, if you look at staples, you look at a mid-sized pocket like specialty chemicals, all of them seem to be priced well. So what do you do? Do you find value in businesses which will probably not recover immediately but 6 months down the line? Or do you buy companies which will perform irrespective, even if the valuations are rich?
I think it's more of the former because there are companies which are going to benefit from this situation, whether we look at sectors like general insurance, sector like telecom, chemicals, as you mentioned. So I think there are segments which will benefit. There are opportunities in pharma and healthcare also, which are emerging out of this situation, especially the way the U.S. situation is panning out and the fact that we had seen continuous pricing declines in generics, and now that seems to be reversing with shortages, etc. So there are a few bright spots for us in the market to pick from, and I think from a portfolio perspective, that is what you have to do. You have to de-risk yourself from segments where you think the impact could be worst in order of priority. So and therefore move the portfolio towards stuff which you think is going to benefit once the dust settles down in 6 months, and where valuations are obviously reasonable. So therefore, it's a constant kind of a search for those kind of ideas, and that is what we have to do in a market like this. And also, I mean, our funds we are right now sitting on a little bit of cash, so that also helps us wait for if the news flow were to really get worse and if there was to be another round of small correction. I think the corrections would be, not as steep as what we saw last time. But if and when we do get smaller rounds of correction, which I think are part of every market, then we will be using that opportunity to pick some of the names in the sectors which I mentioned, which have become maybe too expensive too soon. And I think that's what we have to do in this market.
Okay, well, so that's the view from Rahul Singh of Ampersand. Now we have a bunch of queries, and we've got Deepak Shinoy with us as well. So maybe we'll start off with a few queries because that's what we do every day at 3 p.m. And then, of course, talk about some of the other views that Deepak has. I think he would have already written on this Franklin Templeton scene, so we'll ask you about that as well. But first, the queries, some technical, some fundamental queries. And start off with Sarvesh's view. Okay, let's start off with Sabrinathan's question. He's asking for a short-term target on Sun Pharma. Since it's a short-term target, I'll ask our technical experts for those. Would you want to comment on this one, Pritesh? Sun Pharma, what's a short-term target for this one?
Yes, I think this stock has done a lot. In fact, we can see that right from 9th of April, the stock has been moving in one direction, from 440 to 485. In fact, made a high of 498 on the futures. I believe this stock is bound to consolidate. There is no point of getting on in this stock after such a terrific up move right now, because risk-reward ratio is not in our favor at all. So maybe when the consolidation takes place, the stock is available back around 465. That would be the ideal time, not currently, and not at current levels.
Kunal, Mohammad Ali wants to know if we will see a bounce back in Bharti Infratel. What do the charts suggest? Anything?
If you look at the entire formation, there is clearly been lower top, lower bottom, and today again it broke its very important support mark, that's around 155. So I don't foresee any bounce in the near future. I think even if there has to be some kind of bounce, it will not happen before 130. So if you're already long, I would recommend you to take a hit and exit and wait for some kind of consolidation before entering that.
Kunal, Arvind Singh wants to know, Kunal, if it's the right time to buy PVR. So I'm guessing both technical and fundamental. I'll first ask for the technical quick view. PVR.
Certainly not again. The reason being, previously we saw bottom of at the same level somewhere in the beginning of April. That's around 7th April, 950. From there we saw a bounce. It's back to the same level, but today's fall, as of now, the counter is trading near to the low itself. I would say again, I would not really be encouraging to buy at this level. I think it can be a better short once it closes below, say, 940 kind of thing.
Okay, Sarvesh has a question on SBI, but before that, okay, since we are on the topic of PVR, Deepak Shinoy joins in as well. Deepak, good having you. Thanks for joining in. We'll get to the index view, and I also want you to comment on Franklin Templeton. But since we do this query segment right now, I just want you to jump in with some views here. It's a fair ask whether PVR as a stock which is halved in terms of price, and one quite ascertain can't quite ascertain what the valuation could currently be. But how do you approach a pocket like this or a stock like PVR currently?
Yeah, so I think, firstly, thanks for having me on the show, Neeraj. I think, the problem with PVR is right now we are seeing, even in China where, things have receded and things have started to come back, and they aren't able to open cinema theaters, at least for the near term. So there is that as a challenge. So we might see that as a recovery only after pretty much everything else is recovered, which means we might see a period of no income for a reasonable period of time. Now, PVR also has debt, which creates another problem. They may be able to remove some of the liabilities that they have in terms of rental costs by invoking force majeure or some kind of a moratorium on rent payments until until for a few months at least. But I don't know if income recovery will be immediate. So the next 6 to 8 months, you're looking at a fairly damaged outlook for the stock. But over time, I think this will come back really fast in terms of business once all of this is over. So because I think once it's over, people will really want to see movies. Right now, people are not making movies and releasing them. So they will all be punched during the time when theaters open. So there will be a lot of demand. A lot of people will go also for the novelty fact. People, people don't go to movies, to the movie theaters just to watch movies. It's an experience. It's a family thing. It's a dating thing, or however it is. It's more the experience than it is for the movie. So it will recover. So I believe a few months before that is when the PVR stock will recover. So I won't expect to get into it right now. I'd like to see some more clarity. I think the West and perhaps the East will show us the way in terms of how the theater performances will start moving as those economies recover from the virus first. So I would wait for that time before I take a decision on PVR. I have held the stock. I have actually in the last month or so, we've reduced our position and gone out of it. But I'm eagerly looking to a point where I can come back to it as well.
Okay. Now the other one is interesting, Deepak, because while the query is for a view on SBI cards, you can probably extend the argument to all consumer lending businesses because they are under intense pressure. Firstly, on SBI cards, and then if you want to speak about whether it becomes really difficult to pencil in what kind of damage could come into any of these consumer-facing, consumer lending businesses.
So I think two things. Firstly, SBI Cards is only partially a consumer lending business. It is actually a consumer transaction processing business. Half. So half of its revenues comes from fees, the other half comes from interest charges. The half comes from fees is typically when you go into a portal, use your credit card, they charge a fee. That fee goes to the issuer card mostly, and that is SBI cards in this case. So they make about 3,000 odd crores from that, and about 3,000 odd crores from the interest charges that the fees that come across, interest charges that come across. So there will be two problems here. The interest charges may still continue to a certain extent because although there is a moratorium and all of that, the interest will continue to be charged. The transaction fees may be substantially reduced now, at least for these months, because we're talking of roughly 2 months of no travel, 2 months of no entertainment, restaurants, movie theaters, whatever, what have you, where these cards were used. And if that is about 3,000 crores a year, that's about 250 crores a month. So we're talking of a fairly large reduction in income that will happen. And perhaps these also will take a little bit of time. You're not going to travel, no international travel, no domestic, so card usage will reduce. So there, I think, is where you have one area of a problem where they don't get that kind of revenue. The second area will come within the interest collection and perhaps NPAs over here, where because it's unsecured lending, you're going to have some people who may not have the same levels of income. Now, to a certain extent, SBI Cards lends to slightly higher yield people whose income levels may drop a little bit, but expenses would have dropped substantially in this time. So they may still have the money and they may want their credit rating to not get damaged. So a significant amount of them might still consider paying in order to not have to, go down in the credit scores and so on. So I feel there that the NPAs may not be so much, and this applies to a lot of consumer lending businesses as well, where they are lending against, say, consumer durables, the people there may not be necessarily willing to default and willing to let their this thing goes on. Though there will be an increased amount of such defaults, it's the SME lending businesses that might see a greater hit in their this thing. However, we will see delays across the board for repayments, probably renegotiations. The credit card and consumer lending businesses typically have a 20% margin or more. So we'll be able to kind of use that to perhaps negotiate a lower interest rate for default payments and so on, which may help them recover. So I think, again, first next 3 months, not really useful to kind of think of this as in any meaningful way an investment. But based on how the recovery happens, and if it there's a stimulus or there's an income aggregation from the government, or things change from an income perspective, I think these businesses will come back and come back fast. However, I mean, right now this is a preliminary assessment. With data, everything will change. So I won't invest in it right now. I'd again wait for data and then buy into these. This is not the. There are other businesses that you might want to invest in, but such as pharma, but not right now in PVR or in SBI cards.
Yeah, sorry, I meant consumer spending, really. I mean, businesses which benefit from consumer spending, not consumer lending. But yeah, all of those facing intense pressure. Look at Bajaj Finance, by the way, 1973. This is substantially lower than almost anything that we've seen. And Kunal Ramya mentioned that he would be happy to maybe initiate a fresh shot out there as well. Kunal, just one quick 30-second view before I let you go. What's the view on Z? It's down about 8%.
Again, on the Z, there was some kind of consolidation and it again broke below that level. Neeraj, I'm not finding any good opportunities on long side apart from IT counters and few of the pharma counters, because pharma also rallied significantly. So keeping those aside, I'm ready to short on every decline as of now, because wherever the momentum begins, I'll be there for short sessions. So again, here is a short for the day on Z also. Keep the stop loss of days and continue the position.
Okay, a short on Z as well, stop at the day's high. Kunal, we'll let you go. Thanks much for joining in and giving us that perspective. There was also a short call on Bharti Infratel that had come in. It's important to get a quick perspective, viewers, because there are a lot of queries that we heard coming about Bharti Infratel. So Somit Sarkar joins in. He tracks this very, very closely. And Somit, in the morning we were talking about these results and there were some chinks in the armor. But this is a very sharp gash that we're seeing on Infratel.
Well, a 10% drop in the share price is very equal to the 10% drop that the company reported in their EBITDA, which is also the biggest sequential drop reported by the company since listing. Now, this was primarily due to higher other expenses, which was up nearly 2.5 times compared to last quarter to close to 289 crore rupees. According to the company officials, the jump in other expenses was due to provision for bad debts, which is in line with the company policy. However, they did not mention the amount as a delay in payments from the telecom operators who are currently operational in the industry. Now, earlier also the company has reported bad debts that was mainly related to telecom operators who have exited the telecom industry. This time there has been a delay and missing payments from operators who are currently operational. Now, the delay and missing payments from operators were on account of AGR matter and COVID-19 related disruptions. That is what the company said. Now, if you see, currently, the company is not seeing this as a concern, as it is expecting the payments to come through in the coming months, and they'll wait for a couple of more months, consider it as a default. Thus, you're seeing a weakness in the share price of not only Bharti Infratel, but also in the share prices of Airtel and Vodafone Idea. Along with this, the company also said that in their board meeting, the management has yet again extended the long stop date for Indus Infratel merger till June 24 from April 24. And this is the fourth time that the company has extended the long stop date for this merger completion, despite receiving all the regulatory approvals.
Yeah, it's looking slightly weak for sure. Samit, thanks so much for putting that into perspective. Now look at the slightly broader end and a bunch of stocks which are correcting thick and fast. Deepak, I can understand that there will be major demand issues for real estate, but the only place where people will be secure the most is a home. Home sales will somehow not come back, and some of the premier players in a sector which was the best performer in 2019 have halved. Oberoi Realty, no issues with balance sheet, etc., but down about 11.5%, 12%. Some of the others too have come off. What's your sense here? Would you not touch this pocket with a barge pole, or would you keep it under some consideration? What's your advice on real estate stocks?
This is for me, Neeraj?
Yeah, Deepak, for you.
Yes. So I think, so real estate, if I divide into two areas, the expensive real estate and relatively inexpensive, keeping commercial aside, where I'm talking about houses that are 25 lakhs to 30 lakhs around versus houses that are more than that, so the 70 lakhs, 80 lakhs. So there's a lot of builders focused on the higher end. Most of the big builders that you see listed are, from the Godrej Properties to almost all of them, from Oberoi and so on, they're all relatively more expensive real estate where there's a glut. There's an extreme oversupply in most cities. There is very little demand with COVID and perhaps incomes changes. There may be a problem in, reviving demand for that segment. Even though interest rates have fallen, I don't think real estate prices are going to go up meaningfully. So there's no pressure to buy a second house. And at best, you might see a lot of, some of the first-time buyers try to get a house if these people are able to reduce prices. And I think some of them will have to reduce prices, take a little bit of a loss to get rid of inventory, because otherwise debt is piling up on their own balance sheet. So this process will eliminate, according to me, any investment-related, attractiveness for the high-end real estate sector and therefore the high-end real estate companies as well. But if they're companies that focus primarily on the 20, 25 lakh, 30 lakh houses, that might actually be quite a useful thing because their demand will, according to me, increase. COVID has forced people to live together, people who perhaps as families have had to bear with each other for only about 8 or 9 hours a day, most of which was sleeping. Now you had time where joint families have kind of had to be together for significantly larger amount of times, 24 hours or more, and therefore there will be this desire to say, let's nuclearize, let's go back to owning a small house if we can on our own, because staying together is probably not the best alternative. This is normal. We've seen it in soap operas, but happens in normal life as well. So the lower end of real estate economy will see a lot of demand. Unfortunately, there's not much we can do from a buying stock segment. There's hardly anybody who's focusing only on that segment. But I think as data comes by, those stocks might come to be quite attractive. I would say this is a thesis, so let us wait till it actually comes through. It's similar to a thesis on, say, people buying personal vehicles or cars or bikes. I have to wait for the data to match the thesis after the lockdown ends. But I think that is where the attractiveness is in real estate. I would, in general, avoid most of the larger name builders right now. Wait for a year. I think if they start to reduce prices, buy those guys. Anyone who starts to reduce prices is going to be able to win because of lower inventory costs going forward.
Okay, well, it will be apt now because the markets are trading at the lowest point of the day heading into the weekend to figure out what dealing rooms are recommending in the session today. What is it that they are seeing and what is it that Darshan is learning from his sources? E. Johnson right now with that. Darshan, good afternoon. What are you learning from your sources?
Hi Neeraj, good afternoon. I think NBFCs, the pressure probably will continue. You can see how Bajaj Finance has reacted. Some of the domestic funds are active sellers in the counter. It's down almost 10%. A couple of things here that if you talk to people, I think the commercial papers are trading at very high. The papers are trading at very high value, but certainly not getting traded. So there is concern there. And interestingly, on Bajaj Finance, I was just seeing on Bloomberg, for the first time in the past 5 years, the difference between where the current market price is and the target price of the analyst is much higher. So the Bloomberg consensus does indicate that a potential 80% upside, but clearly that's not happening because people aren't revising their target price and the counter keeps on going lower. The other one is Interglobe Aviation. While some bit of management commentary came in the media indicating that they are unlikely to stay, they believe that there is no assurance from the government in terms of any aviation package that could come in, and also they are booking tickets now from the 1st June level. So they believe that at least for the next 1 month again flights will be grounded. So there will be pressure on Interglobe Aviation. And Escorts again is another stock in which some of the foreign funds have been active sellers in the counter, and clearly there has been pressure on the counter if you see the stock price.
Well, thanks a lot for that, Darshan. So we will watch out for some of these names, but yeah, it's an interesting dichotomy, isn't it? The poster boy of consumer lending has the highest return potential as per the sell side, because some of the target price would not have been changed as well on the Bloomberg terminal or on the brokerage side, and therefore the terminal doesn't capture it. And yet nobody quite believes that the stock will do that, because if anything, there are more sell calls right now at the near term than the buy calls on this one. But a bunch of other NBFCs have looked wobbly. Pritesh, can you tell us which of these non-Bajaj Finance NBFCs look very weak? Because there's Chola, which is down 12.5, M&M Financial is down 9.5, to LIC Housing Finance 9.3, Ujjivan, Equitas, everything is look weak. Which is the weakest structure? Pritesh? Okay,
Yeah,
I think
I'm over here. Now I'm expecting downward pressure to continue within this financial space. And in fact, if you look at the structure of some of the stocks, they had a good brief rally before today's round of pressure. So I think something like LIC Housing Finance will be down by 9%. I think it will give away the recent rally, and I won't be surprised if the stock comes back to levels of 230, because this is the area from where the stock started rallying. So if I look at the chart, it will come back to the lower end of the trading band.
What about Piramal Enterprises, Pritesh?
Yeah, just a minute. Now for Piramal, the way the chart is shaping up, we have seen some sort of just pullback from the support zone. The support zone is placed around it is placed around 800 mark, and we have seen a pullback. But I'm not so convinced whether this pullback will continue for a long time or not, because there are multiple overhead hurdles on the offing. If there are multiple GAN numbers, Lucas number in the area of 900, 925, so it will be difficult for the stock to continue the recent run up. So I think if someone is holding the stock, they need to exit on rallies.
Okay, and what about a top closing strategy, Pritesh?
Now see, the way the charts are shaping up, I won't be surprised if Nifty goes back to 8,900 levels in the near term. It would be difficult for Nifty to go below that, because we have seen dearth of negative news right now. A plethora of negative news taking place, whether it is the sharp decline in crude oil prices, the Franklin Templeton issue. So there are several negative news taking place. But despite that, we are able to defend last week's low. And so I'm expecting just a pullback towards the lows of 8900. From that point onwards, we could see some buying coming in. The way Reliance stood up today in the morning trade, yes, it has given a back bit of gain, but I think around 8900 there will be a round of opportunity coming in banking stocks.
Okay, we'll watch out for those. But Pritesh, take a moment to thank you for joining in today and giving us the thoughts. Appreciate your time. Now, viewers, we've got a lot of queries throughout the day on the Franklin Templeton saga. I've written a piece on that as well on our website. Do read it. And we'll get in Deepak Shenoy to answer that after market close, because we're very close to market closing time. I'll just take a couple of queries with him, slightly shorter ones, and then we'll wrap the markets and then get in Deepak Shenoy's view on this whole Franklin Templeton piece. But Deepak, pharma is just looking unbeatable right now. Just that it becomes difficult to discern which is a stock available at good valuations, which is not. Do you have any thoughts and reasons thereof?
So I mean, at this point, we are also buyers in a lot of pharma stocks actually, and because that's the only place where we're seeing momentum. So we have a momentum portfolio. We're buying those, but there's also there's also another angle to this. There's domestic pharma and international exports. Some parts of the export ecosystem has high dependence on China. Some part of it does not. So there are ways. If you go into some layers of detail, you might find a lot of companies in the pharma space which have relatively low dependence on China for imports and have in the recent past gotten more, FTA approvals or generally, where their products have actually been in demand from abroad, so that those parts of the ecosystem will continue. And remember, not a lot of these are operating at full capacity. So while their sales orders may increase, they may not be able to fulfill for a while in scale. But I think from a perspective of where they have been beaten down for so many years, there's been a light of, a ray of light in terms of, FDA opening up a little bit more, and perhaps it's also the U.S. requirement to be de-risk from China a little bit that allows Indian manufacturers to benefit. So I think that should help directly, where companies are exporting. There's also the contract research manufacturers, the likes. I think we've got the from. I won't take a lot of names right now because we're in the process of buying them, but I feel there is a lot of latent demand in the pharma sector. Some of the run-up recently is justifiable, but it's also coming after many years of underperformance. So to that extent, I think there is still a lot of potential and a while to go. I think from a domestic formulations and brands perspective, you do have and you will have continued demand. And some of these companies are still trading at extremely high valuations, and they have traded at high valuations, especially the MNC brands, for a while. So there, I would say just be a little more cautious. Although we have been buyers in those stocks, I think opportunities exist across the pharma space. You want a little bit of domestic, a little bit of exports, and build yourself a pharma part of the portfolio. Perhaps where you're exiting from other stocks which are more consumer demand, stationary oriented, you might want to add pharma and increase the weight, and therefore take on these positions.
Okay. Deepak, stay on. Let's start wrapping up the markets, and then we'll, of course, take in his final thoughts on the Franklin Templeton piece, as I've been saying now thrice already on the show. But let's start wrapping up the markets. Reliance ends at the top gainer, about 4% higher on a day when the markets have come off about 1.5%, and the bank Nifty is down about 3%. Mind you, the world markets aren't in ship shape either today. So Reliance 4%, Britannia up about 3%, Cipla and Sun Pharma follow about 1.5% apiece, and there is Larsen with about 1% higher. What's not doing well? Clutch of names. Bajaj Finance 1984, down about 8.5%. Bharti Infratel about 8.5%. Z Entertainment 7.5%. Finserv 6.5%. Hindalco, Axis, IndusInd, ICICI, HDFC. The street is littered with what's happening to the NBFC space and financials, and mind you, at the broader end of the spectrum too. We have Chola, M&M Finance. I'm guessing Muthoot would be in the red. Equitas, Ujjivan, that whole bucket is looking wobbly. Oberoi Realty is down about 10%. There is weakness in UCO Bank, another financial name, down about 10%. Cummins India chips in with a 9% loss. There is weakness in Nalco, about 8.5% gone. Vodafone Idea loses about 7%. By the way, Bharti is in the red too. What's doing well? Deepak Fertilizers is strengthened. Sonata Software throughout the trading day today. Aegis Logistics, I think, gains. There's a brokerage note, if I'm not wrong, on Aegis, or some news flow around this one, but that's up about 9% for a reason. I just can't place what the reason is. And the mid-sized pharma names too. So Alembic, Alchem, Magenta, Strides, Lupin, Laurus, Ipca, that entire bucket has done extremely well for itself in the session today. So all in all, it's a good close to the trading day today. The volume, rather a good close to the pharma stocks today, but not the best of days for the markets at large. The volumes reasonably okay. The advance decline firmly in favor of the declines. Final thoughts from Deepak Shinoy. And Deepak, we've discussed the market at length. Maybe you can give us a brief comment of whether you're buying anything or thinking of buying anything, or are you staying put right now because you believe the markets could crack? And then a view, Deepak, on this whole Franklin Templeton saga.
Yes. So, we're buying, as the market goes, we're regularly buying anyways. And today is a day where I think we've bought very few stocks. We've more or less bought some ETFs, really, some of the non-India ETFs. We're very bullish about the whole world coming back. So there is some part of that we have international exposure in. But Otherwise, I think, there's been a lot of beating up of the NBFCs, and I believe some of these NBFCs are going to, take some time coming back, but the rest, they're fairly okay, and I don't think there'll be a lot of damage. A lot of them, including like Muthoot, for instance, which you mentioned, and at the same time we are talking about them getting beaten up in the markets, they have just raised money from a primary issuance of commercial paper at 6% odd, which is quite remarkable. Because if you're thinking that the equity markets think that they're in trouble, the debt markets, which have been seeing extremely low volumes and rough situations, they're allowing Muthoot to finance 91-day paper at 6.35%, which is fairly low. I mean, if you consider that it's a double A rated company and, all the commercial papers rated at the top level, it's still, people have been talking about the US, some Moody's downgrading something and all, putting a negative watch. You're still able to raise significant amounts of capital. I think today was 250, yesterday was 500. So there is a significant amount of capital that they're able to raise at very low prices, even in a market like this. So you should be cognizant in the NBFC world that there'll be some good guys and there'll be some not good guys. The good guys are able to raise it regularly at low prices, and the not so good guys will not be able to raise, or they're raising at extremely high prices. So they're high yields. So if you differentiate between the two, I think the intersection of, the good people is where I think the opportunity lies. And as data evolves, you'll get more and more data, or so there are new names coming into these lists. So we're buyers of that. We're buyers in auto. We're buyers in some of the pharma space that we talked about. We've also been heavy buyers in Reliance. The last 2 days have been little, big up moves, but Reliance I like for the fact that it's going to own the whole ecosystem in telecom and in media. So which I think the integrated play is really where India's future is, and the ability for them to create a platform where other people can participate as well. So these are the areas we're concentrating on. But again, nothing like I'll say I'll go put all my money in Reliance on one day. We're spreading the purchase over a significant amount of time. And I have no problem saying that I've been buying Reliance for the last maybe 12 months, and I'll probably continue to buy it little by little over the next few months as well. On the Franklin Templeton point, should I take that question now, Nish?
Yeah, please, Deepak, please.
Yes. So I think Franklin Templeton is where we've got an issue with credit risk at one layer, but also the freezing of the bond market for sub-investment grade bonds, if you may. So the one of the reasons why if you remember the DHFL crisis, when it started off, the first year that came was when somebody sold a DHFL bond at 11% plus yields. This was surprising to the market, but not surprising to people who have been watching the debt markets, because in some trades they were already trading at 10.5%. But the point about this is when there are very few people who want to buy debt from companies where they see an unsecure future. In times like COVID, all the money will go to companies that are definitely likely to pay back. Like I talked about Muthoot, I talked about a bunch of others. I think the feeling right now is the companies that will pay back will easily get money, and the companies that don't will not get anything, no matter how much or how high will they pay. Unfortunately, Franklin's debt funds have had a lot of paper where they are either Franklin is the primary or the majority debt investor, or there are companies where the fundamentals have fallen short of expectations in a lot of ways, whether the collateral is not enough, or whether sometimes the company's operating cash flows are not enough, and so on. To a certain extent, I think if you look across the universe, some of the funds that they have shut down are some of these actually have a lot of holdings of bonds which no one else desires. So they can't sell those bonds. So when they get redemptions, now Franklin itself had ultra short bond fund. This is one of their flagship funds. In October 2019, they had 20,000 crores in a year. By January 2020, when the Vodafone saga started to hit them, they were at 17,000 crores. They segregated Vodafone Idea into a separate portfolio, and then since then they've been seeing sliding AUM. So AUM has fallen to 16, 15, 14, and as of Wednesday, just 2 days ago, I think their AUM was about 9,000 odd crores. So I've seen a halving of the AUM. Now, what happens when you sell, when you have redemptions? Is you have to sell and pay back your investors. Who do you sell to? So you go to the market and say, listen, I got these bonds for sale, and they'll say, give me the best of your portfolio. Now, if I have 10 eggs and one of them is slightly rotten, I have 10% slightly rotten eggs. Okay, if I have, if somebody comes and says, I want to buy an egg from you, he's not going to buy the slightly rotten egg. So he's going to take one of the good eggs from me. Now I have 8 good eggs and 1 rotten egg. So as a percentage of my portfolio, it's gone, the slightly rottenness of the eggs has gone from 10% to some 12 or 13%. So you effectively say that what happens is the good stuff keeps getting sold, and the bad stuff, or the stuff that no one else wants, increases as a percentage of my portfolio. Therefore, at a certain point, I might find that I might not have any buyers. I still have redemptions. So the fund borrows money. So many of their funds had to borrow money in the last quarter, or in the last month, to be able to pay. So what happens is typically, let's say I have something maturing April 21st, but on March 31st I receive a redemption. Nobody's going to buy that bond, even though it's maturing April 21st. I borrow money, and after 21 days I will get it back from the bond when the issuer pays me back. So I have to borrow for this 21-day period. They've done this in most of their debt funds. This has resulted, this has been going up. Redemptions have been increasing. And now what they realize is the existing investors are going to hurt a lot more if you retain, or if you continue to borrow and sell off all the good debt, while the bad stuff, or not bad, I may just say not desirable bonds, continue to increase in their portfolios as a percentage that increases. So they've said no more redemptions, no more entries. As and when the bonds in our portfolios mature, we will receive cash, we will pay them back, pay all the investors back, but you won't be able to exit and you won't be able to buy anymore. This is now created a fear because it's almost like a yes bank moratorium kind of situation, right? So you can't buy anymore, you can't sell. So although you know your money is there and you can see what it is and when the expiry dates are and so on, you really don't know when. You don't know why somebody has done something like this. So the fear is that this will spread to other parts of the system, where you have other people saying, let's pull the money out of debt funds. If you pull money out of debt funds, this is a fairly large market. I think 18-20 lakh crores, or maybe a little bit around that, a little bit less than that, is the debt part of the capital market. So the mutual fund market. So you have the potential of a lot of this getting redeemed. Let's say even 5% were to be redeemed. We're talking 80,000 to 1 lakh crores. There is no depth in the bond market to absorb that kind of redemptions. So there is potentially a problem that could come in the system if a lot of people redeem. And I think you're going to need the system to address it. We've had such situations in the past. RBI has addressed it. And I think this time they will know by tomorrow or today by now already how much of redemptions were actually there, and therefore how much sales should have happened. So if this situation gets worse, it could lead into a systemic issue. But right now, the situation around Franklin is that if you're an owner of one of these funds, you will get your money trickling in over a period of time, depending on 2 factors. When these bonds pay, which means they'll pay interest and principal over a period of time, and in other cases when the mutual fund is able to sell those bonds at reasonable values. So whenever they find a reasonable buyer for it, they might be able to sell it. They might take a small haircut or a hit on the portfolio, but they'll try to optimize it such that you don't lose too much. That's one of the reasons why they've set up this moratorium is so that they can get time to unwind it, in a safe-ish manner without trying to be panic selling. So this has repercussions on the system, but let's see. I mean, it's very early. India has not seen such a situation. I don't even know if SEBI, what kind of action SEBI will take, but it is a pretty, scary time to be owning debt portfolios, and there you have to analyze what you own and what your funds own with a more, closer look and take action accordingly.
Yeah, closer look indeed, more so in the credit risk funds. But yeah, please, I mean, one just hopes that the redemption pressures don't increase on the other funds as well, because Deepak is right. You will not have as much depth as well. But Deepak, take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time. Have a good weekend.
You too. Thanks. Be safe, please.
Thanks. Yeah, be safe. And viewers, be safe too. Thanks so much for tuning in. Have a safe weekend. Thanks.